California's pension crisis continues to worsen. We knew they were underfunded. We knew the situation was bad, but now we're facing talks of cuts. This is what everyone feared, but didn't want to talk about. The time is now. You came here for the truth, so let me unveil that for you. Today we're going to look at California's pension crisis in 2018. Let's begin. Public pensions have been reducing assumed rates of returns, cutting from a median of 8% 6 years ago to 7.5% currently. Now, more than a handful are below 7%. We've seen a pronounced decline in return assumptions. And momentarily, I will discuss why this is very important. You may know Bill Gross. He had a few things to say, and in this case, I believe we should definitely be paying attention. Public pensions have been hurt by the Fed's zero-rate policy that Gross says has led to erosion at the margins of business models, such as the ones used for funding public pensions, which depend on assumptions about returns over time horizons of 30 years or more. They have a model. They have these ideas, and they make assumptions. And so we have these different variables. How much money they're going to be making per year, how much money they need to have, how much they need to pay out, and so on. And these variables, we make these assumptions based on different things that are happening. But ultimately, they want a long period of time to have 8% potentially rate of return. Suddenly, if that 8% goes to 7%, compounded, this is a very, very big problem. Everything gets put out of whack. So, Bill Gross said this, and I unfortunately agree with him, that this is what will happen. I don't agree with the whole policy. Pensions have to, quote, adjust. They have to have more contributions, and they have to reduce benefit payments. So he just said that they will have to give more money and get back less. Welcome to the new world. A world in which you get less and you pay more. How many times do you go to the store and you've been buying that same product for decades, and for some reason you can't help but notice the contents of that seem to get less and less and less, but the dollar figure seems to rise? It's happening all the time. And I do believe that many people are relying on these pensions to live. And it is truly unfortunate that they will go the route that Bill Gross is talking about. This is not a good sign. A lot of people are going to be hurt by this. They're going to be very, very ticked off. All right. The essence of California's pension crisis was on display last week when a California public employees retirement system made a relatively small change in its amortization policy. The CalPERS board voted to change the period for recouping future investment losses from 30 years to 20 years. Some people might think, what's the big deal? Of course, if they read about it in the newspaper, they would probably skip the article. But take a look at this. The bottom line is that it will require the state government and thousands of local government agencies and school districts to ramp up their mandatory contributions to the huge trust fund. That's not a good thing. Client agencies, cities particularly, were already complaining that double-digit annual increases in CalPERS payments are driving some of them towards insolvency, and the new policy, which will kick in next year, will raise those payments even more. So you already are pushed to the edge. And all you need is just a gust of wind to come by. And this could be it. There's no way that they are going to be able to withstand any more pressure. And this is all the while equities are rising higher and higher and higher. Practically everything is doing better. Yet, pensions don't seem to be the case. And I happen to assume that maybe a little bit of that money is going somewhere it shouldn't be. But of course, that's speculation. What we are trying to avoid is a situation where we have a city that is already on the brink, and applying a 20-year amortization schedule would put them over the edge. Of course it would. But CalPERS itself may be on the brink, and the policy change is one of several steps it has taken to avoid a complete meltdown. That's their words, not mine. A meltdown. That's what's happening right now. And guess what? If a lot of people get less money, if we see a big bulk of people getting less money, what do you think they're going to do? Of course, they're going to get very, very upset. They're going to take it to the streets. The system, once more than 100% funded, now has scarcely 2/3 of what it would need to fully cover all the pension promises to current and future retirees, and that assumes it will hit an investment earnings target 7% per year that many authorities criticize as being too optimistic. They had lost $100 billion in the Great Recession, never fully returned. Why? Everything was rising, all right? Everything was doing so well. Nothing to see here. Oops, subprime mortgage crisis, the financial crisis, and we know what happened. Now we hit that rock bottom, March 2009. Everything started to come up. But why? Why, oh why, have the pensions not been able to trace the same returns as the S&P 500, as, let's say, a basket of stocks, a large basket of stocks and bonds throughout the same time frame? It doesn't make any sense. Sure, there are administration fees and everything else, but what is it about this that they cannot get those returns? I personally think, once again, speculation, that a lot of this is being siphoned off. Where is it going? You tell me. CalPERS' lofty investment goal runs up against reality. The system's funded status declines as returns trail. It doesn't make any sense. The stock market is going parabolic. If you look in, let's say, over the last 12 months. There's no reason for this. 68%? We're talking about a funding ratio that continues to decline. It doesn't make any sense. There are always going to be a lot of people taking the money out and needing their pensions. What is it about this that they don't have an answer for? Federal, state, local underfunded public pension liability. Just to give you an idea, this is actually $8 trillion, okay? Because it's in the billions. So if my math serves me correctly, looks like it's 8 trillion. That seems ridiculously high. Anyway, hopefully I got my math right, but there's no way that they can pay it back. Even if it was 8 billion, they wouldn't be able to pay it back because those returns are declining. Illinois underfunded pension obligations have soared over the last decade. Years of shortchanging retirement funds is straining the state's finances. Just look at this. Is this possible? How are they ever going to mount this potential returns to go in line with the amount of unfunded liabilities that they've carried? Look, since the financial crisis, everything just got worse. Look at how it gets completely worse from 2008 to 2009. The situation just takes off. It never returned, and it never will. It never will. Switching gears for a moment, I just did a video about Warren Buffett yesterday, and I wanted you to see this here. Now, this is one company that has really been doing well since the financial crisis. They've been buying up everything. I just did a video about how they have spent over $100 billion on treasuries, sitting in cash, essentially. One of the things that I found interesting was how much, right here, percentage of company owned. They own 17.6% of American Express. Imagine one company owning that much. Look what they own. American Express, Apple, Bank of America, Bank of New York. I mean, we got some banks in here. We got some staple, huge companies like Coca-Cola, General Motors, and everything else. You could see this. Look, Moody's. Get their friends at the rating agencies here. Goldman Sachs, they own, of course. And to me, this shows the power, the absolute power of one corporation. By the way, this is actually from BerkshireHathaway.com. You can see their reports if you're ever interested. Check them out. But imagine what they are investing in, their rate of return. Compare that to the rate of return of CalPERS, for example. We are talking about, think of them both like two companies, two institutions, okay? We have people getting paid a hell of a lot of money to make sure that they are investing in the right place, to investigate all these companies, to go physically to these locations, meet with the people, see the book of business, see what's publicly available, check the news, have the analysis. I mean, there's a whole process involved when one big company invests in another. Okay, there's a whole process. And of course, these companies, they sort of sell themselves. And there's a lot going on there. But why does a company like Berkshire Hathaway have no problems, seemingly, with their investments? They're making a killing right now. And then you look at CalPERS, which is still, it's very, very big. It's massive. And they can't get things right. Mismanagement, perhaps? I think so. That's part of it. Something's going on. But in the end, all that matters is that people are going to be paying more into their pensions. They're going to be getting less back. I'm telling you right now, you mark my words, people are going to be getting less from their pensions. Pensions will be cut. And when the pensions are cut, the people will riot. The people will take to the streets. And the people are not prepared. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it supports the channel. So I do appreciate this very much. If you want to support this channel, all you have to do is give me a thumbs up, comment on these videos, and subscribe to the channel. We are just nearing 90,000. It's getting pretty close there. So if you want to join the rest of the 90,000 individuals on here, I'm posting videos every single day, constantly covering the information that other channels, and definitely the mainstream media, doesn't cover enough. So if you want the truth, tune in, hit the subscribe button, and you will get the best information out there. Of course, I'm heavily biased. If you found the video informative, I know you'll find my books even more informative. You can flip through them at Amazon. Links are in the description below. Take care.